Two reasons for seller financing. One, the business you're buying is not loanable. Okay, what I mean by that, the seller's books, their financial statements, their tax returns are just in shambles. Okay, they're not kept well. It says they're losing money, but they're actually making money. So a bank's not going to touch it. So under that circumstance, the seller has to finance because the bank won't touch it. There are rare circumstances where a seller wants the seller finance for tax purposes. Most sellers don't understand the consequences of selling, but kind of a sophisticated tax situation here is if you do seller financing, it spreads out his tax bite over multiple years. If I just sold the business outright and did not do seller financing for $1 million, in the year I sell that business, I have a $1 million income situation I got to pay taxes on. If I do seller financing, that's called an installment sale. And let's say I did it over 10 years. So now my income is $100,000 a year over 10 years, puts me in a much lower tax bracket, maybe a 15 or 20% tax bracket for all 10 of those years, versus making $1 million puts you into a 40% tax bracket. So kind of sophisticated. So really, to summarize two parts is the business is not loanable, and then the seller may want to do seller financing to spread his tax liability over multiple years.